All right, good day, everybody. Today's Monday, the 26th of February. Hope everyone had a great weekend and a good first day back to the markets. Let's look at what we spoke about on Friday. Remember, we've been long boot, B-O-O-T. We were long boot as the market took out 1725 to 1730. Okay, so we're long at 1730. Ran up a little bit, back down, never took us out. Remember, our stop was right here. Today we had a nice push to the upside with the overall market. Closed at 1783 today. So this trade right here will be break even, right? I'll go to break even to see if we can retest the high tomorrow on Tuesday at 1808. If we are able to test the 1805 to 1808, I'll take half the position off and lock in 20 cents on this trade, looking for a bigger move to the upside. All right, TRUP, as you know, this is a very good trade. Right? We had two double inside bars. We actually went long at 29.06, right? Friday closed at 30.46, and look at today's intraday action. Opened up at 30.55, ran up to 31.60. Nice move. Took off about half of my trade right up in here at 31.20.21. And the remaining portion now is 50 cents above where I entered at 28.06. So 28.56 is where my, wait, hold on. Remember, we went long at 29.06. So 29.66, which is just a few pennies lower than yesterday's, or today's low, Monday's low. All right. So let's take a look at a couple newer. Well, let's look at ADMS. We took a look at this on Friday. I pointed this out to you. Look at this. Again, we nailed that 200 on the gap lower. We opened and closed higher than where it opened. And after it opened, it dropped quite a bit. I mean, look at market opened up at 25.48 and dropped down to 22.89 and reversed and closed back up to 26.02. That is a screaming reversal. I suspect this market should fill the gap. I'm surprised we didn't see a bigger move today to fill the gap from Thursday to Friday's open. But so that is caution, okay? So this is what I'm going to do. I'm going to okay. So the market opened up a little higher, right? So we closed at 26.02, opened up at 26.05, dropped back to 25.29. And it opened at 25.48. So remember what I said on Friday, that I would look to be buying it below where it opened on Friday? It opened on Friday at 25.48. So as the market opened higher and we dipped on an intraday basis, I picked it up 10 cents lower than where it closed, or opened rather. So at 25.38 was my purchase. Went to 29. Let's look at intraday chart and see what that looks like. I'm having trouble here. What is going on? Okay, there we go. So we opened up, ran up, and we came down to 25.29. So as the market broke down, went long at what I say, 38. 38 was right there. That's why I went long. So I'm still long this market, looking for a push higher. But I'll tell you, again, what I'm going to do. So my stop would not be below Friday's low anymore. Not by any stretch. I'm actually going to go 30 cents below the 200 moving average of 24.19. So I'll be below at 20, let's see. So 24.19. So 23.95 is where my stop is going to be. 23.95. Giving it a little bit of room to move to the upside. Okay. Two potential trades for tomorrow. CENX. Classic double top right here, right back down. We got tested this low right in here. Look at where the 2-bar RSI closed at 5.28. Friday we closed at 7.87. So we've got 2 days in a row below. Testing a major pivot right in here. So I'm looking to buy this minimum at where it closed, right? We closed at 2051. Anywhere from 2051 and lower, but not higher. So if we were to gap up tomorrow and not fill the gap back to the close, I would not get long. Minimum where I want to get long is where, so if it gaps lower, that's even better. Then I'd be buying it on the open. PE, all right, something completely different. I don't think you've seen me talk about shorting too much. So you got two options here. You can either buy put options, okay, or actually sell the market, all right, the actual instrument. So this is extremely overbought. See, got a few days now closing above 90, 93. We've had a nice run up. Look at the moving averages all coming into one another. This should be a resistance area the first time up, so I would expect a pullback. So I'm going to look to initiate a put trade tomorrow. I'm going out, so it's February 26th, February. I'm going out to the April expiration in the money. Okay, a little in the money. So if you're going to be in the money, you go higher than the strike, right? So let's say close at 26. So you go 27 or 28 in the money. Put option on PE. I think we're going to come down, and I'm going to use the 2-bar RSI as an exit. So once we close at or below 50 on a 2-bar RSI, that's when I would look to at least take something off the table. Okay, so it just depends. If we continue to run up and then we pull back, I mean, remember, if you're using an indicator as a dynamic exit, it could be a profit target or a stop loss. It works both ways, right? So if we continue moving to the upside and the 2-bar RSI closes at 50 or below, wherever that is, it could be above your entry, so you'd lose money, right? So any questions, let me know. I'll be back with you tomorrow. Bye for now.